All right, good morning, everyone. We get started here. Okay. Um, Last night's session, the States relatively uneventful. Basically finished more or less on flat line. You can see there. The sectors were kind of mixed on the day. Very little to kind of give us any leadership. We did have Procter & Gamble's reduced earnings outlook last night. Just one of the bigger um, uh, conglomerates, I think, to have a look at. But I don't think it's doing anything to drive markets. Obviously, earnings season in the States has actually picked up a little bit this quarter and as a whole, and so I think that's been able to support the markets over the last few days to an extent. We did have the St. Louis Fed President James Bullard yesterday that's saying he expects the U.S. economy to expand in excess of 3% this year, which I think everyone already expected anyway. So just continuing to follow the central bank jargon there. All right, in Asia we had a bit of a correction. You can see there the yen dropped that sort of 102.20 level on the wedge of the recent days, and I think that obviously it's put a little bit of pressure on the Nikkei. We also saw Australia, which was up in the day earlier, and managed to pull back into negative territory after a disappointing employment report. And then you can see obviously Hang Seng down about 0.5% and China flat. So not a lot of leadership there, but bottom line is we're still watching a lot of earnings coming out this morning. We had Woolworths, we've Gold Fields, Rio Tinto, so we'll have a lot to kind of focus on in our market. Okay, so just talk about those. We have Woolworths that missed, I think, most all forecasts in terms of the headline earnings per share number. Also missed on the revenue number. Divi per share came in 1 cent better. You would think that would be really, really negative, but I think the positive takeaway here is that the outlook is very positive. That they've given, and they also said that the start to the year has been better than expected. So, how much of these numbers are actually priced in due to the fact that the share has probably taken 20% over the past 4 or 5 weeks? Who knows? So I think you got to be careful out there when you play this one. Wait until you see the real volume come into the market before you kind of make a decision to play it. The next one's Gold Fields, which came in with a headline earnings per share loss of 37 cents. Expected. I'm not 100% sure on the trading statement what was expected, but the Bloomberg consensus previously was for 54-cent gain. So looks like a bit of a big miss there. Revenue at 7.87 billion rand. Expectations for 8.06, and then Divi per share is down at 22. I think these guys are all these gold shares are really in danger of probably dropping off of the dividend paying list, which is I think in any situation where you see guys dropping off the dividend paying list, it takes a lot of it takes those shares out of the ability for certain funds to hold them as per their mandate to be dividend paying shares. So it's obviously not a positive there. You can see they've dropped the divvy even though they're not making money, but there's only so long they're going to be able to keep that up. So I think very negative for Gold Fields. All right, Rio Tinto is out this morning. I'm still seeing some of the numbers come across the terminal here, but it looks like underlying profit of 10.2 billion US dollars, expectation for 9.66, so that's obviously positive. Maybe lend a little bit more support to some of the diversified miners here. And then later in the States we've got PepsiCo and AIG. Okay, and the market data out today, we had domestic CGPI numbers out of Japan, which were dead in line. We've got German CPI numbers right at the open. Then we've got local mining production and gold production at 11:30. That'll be worth paying attention to. And then we've got retail sales out later in the States with initial jobless claims, continuing claims, Bloomberg Consumer Comfort Number. Yellen's going to testify before the Senate Banking Committee, and then later tonight, we've got Zuma going to deliver the State of the Nation, so that'll be exciting. All right. Obviously, guys are going to be waiting for a lot of the data-heavy U.S. and then Yellen's testimony in the States tonight, so it could be somewhat slow on the day. All right, let's jump into the maps. First thing I want to have a look at this morning is Amplats, and just looking here, I'll actually back it up so it doesn't. Sorry. So you can see there, but out of the recent sort of consolidation and pattern here, we've definitely looked like we've popped to the upside. This it's funny because we showed this chart in Anglos. Remember when we showed Anglos, and it was the exact same pattern in Anglos, but it was always ahead of Amplats. Well, look at that same sort of thing. And look at Amplats. It's still ahead of Amplats. Amplats just getting the breakout now in terms of on a closing basis, and potentially a heck of a lot of upside to go here. I think the market is kind of maybe underweight or even a little bit short to this one, so just keep that in mind. And it's been tracking Anglos on a delayed basis quite nicely. All right, Naspers. Let's go to 1 year here. I'll shorten it up a little bit. I was trying to play this one in my daybook yesterday, intraday. Couldn't get this thing to really pop above this level, but about 1120, you can see there, we definitely broke out to the upside above 1120. Not a huge breakout, obviously. This pullback is just makes it dwarf the breakout yesterday in comparison. So, but bottom line is we continue to push away from 1180 today to the upside. This is going to be really important and gives us an upside target that's miles above this, well over $1,300. So just keep that in mind. We have broken out here. If we still hold 1180, very bullish for Naspers if we can hold 1180 on the day today and continue to push a little bit higher. All right, let's look at Discovery. Back it up here a little bit. Now, Discovery bounced up yesterday on the back of those good numbers to test the all-important 78 level here, which is basically dead on resistance of the breakdown of this head and shoulder pattern. So 78 is key. We closed at 77.93. If we get above 78, then this thing really can be off to the races. What I prefer to see is maybe see us pop up above the trend resistance here at 80 as well, but that will give you further confirmation, and then this thing can really get a little giddy up in a step. But this one above 78, I think it's worth looking at on the long side. Right, Murray also is in a head and shoulder pattern, obviously what we talked about. This one going back maybe 10 sessions ago. Now what's interesting here is just how it seems to be failing. I'll draw it like the wicks in terms of on the closing basis. It seems to have failed 2 days in a row where we literally traded up almost a Rand 50 higher the last 2 days than where the share closed, and it really just looks like a monster fail. So I would look at maybe a drop below the neckline here, call it 2670 for an opportunity to short it if it's something that interests you. But this definitely looks like it's failing at the moment. Look, if we get a close above 28, then I think this thing can maybe go to the upside. But just keep that in mind that right now it's kind of looking a little bit like it's failing. And then the last one I'm going to show is Azor on a 30-minute chart, and you can see here the range for the last 15 or 20 days really just been so tight over call it a 15 to 20 Rand range, and you can see here we've broken out beautifully to the upside there. Probably going to take us up closer to maybe 425 in the short term. And that's it for today, guys. Thanks a lot.